morning. Welcome to Bloomberg Quint Live, India's first digital live streaming business news service. I'm Menaka Doshi.
And I'm Neeraj Shah. You're watching Indian Open. Let's take a look at the headlines and the top newsmakers at this hour. The GST Council has a packed agenda today as it gets set to review the tax rate levied on as many as 200 items and expand the ambit of the composition scheme. SBI, Bosch, Mahindra & Mahindra and BPCL are the four Nifty numbers to come out with earnings today. Third-party logistics company Mahindra Logistics is set to list on the bourses today. And crude prices look all set to post their longest run of weekly gains after Saudi Arabia asks all its citizens to leave Lebanon, heightening the tension in the region. And Walt Disney is making another trilogy of the Star Wars movie, but the first tranche is at least 3 years away.
There's just one line I know from the movie. I saw my first Star Wars movie, when the last edition was out. And I went with some friends who were astonished that I'd never watched Star Wars before. And I thought it was fun. But clearly it didn't move me as much as it had moved them many, many years ago. So there's just one line I know, which is "May the Force be with you."
Okay, your friends will be.
It's the only line Prime Minister Modi knows as well.
No, but
you haven't watched any?
No, I haven't.
Oh dear God!
Are you disappointed in me now?
You've missed an entire cultural revolution, it seems.
Yeah, I guess. But well, let's not miss what the markets are due to do today. Let me just briefly give you a trade setup before we tell you what's lined up on first word. We'll have a start in the red, and that's not a surprise really because the rest of the world is starting off on a tepid note by virtue of course, what the US markets did as well. Now, you could attribute it to various reasons, including mild profit booking or including the look up. As it seems, heightened tensions in the Middle Eastern region or otherwise. The crude is not reacting as much, I must say. But the SGX Nifty is down about 0.5%. It follows the weak trend that we've been having in our markets for the last 4 or 5 sessions. We've been saying that even in isolated trades where the world is doing okay, we've corrected. And that's been the case all through the last 1 week. And in today's session too, we'll start off on a weak note. Not too much of a reaction that has come in from any of the ADRs as well. So while Tata Motors had a fairly decent number, and I think the con call was fairly impressive. We'll make you hear some snippets of that con call as well. But that ADR ended about 1.5% lower. Nothing too dramatic for some of the others as well. ICICI Bank or some of the others, 1% higher or 1% lower. So not really to choose much from. And while I know that during the course of the day, what will happen in the evening on GST or what will happen in the Axis Bank board meet today of course what happens in Middle East will be top draw. But frankly, it's all about numbers today, Menka. 4 Nifty numbers and a bunch. Yeah, 4 important numbers, including SBI, which I think will come out during market hours and all eyes will be out for that. But also a clutch of mid caps, the largest auto component manufacturer, Motherson Sumi, a bunch of other names coming out. So today is a remarkably important day for earnings in India. Yeah, well, it's sure going to be a busy day and it's going to be a long one because we'll go straight into the late evening and the early night as we track the GST Council's announcements. Well, that's exactly the first thing we have on first word for you. What to expect from that very important meet that's underway in Guwahati as the GST Council meets for the 23rd time. They're going to look at a bunch of changes and we're going to detail some of them and the impact on stocks in just a few minutes from now. Also coming up today on First Word, while lower savings rates and a stake sale could aid SBI's second quarter earnings, what people will really keep a lookout for is the lender's asset quality and provisioning figure. And so we'll be watching SBI very, very closely, especially since we've had some of the other PSU banks that, sort of didn't do very well this quarter. And what did Donald Trump achieve in his week-long visit to Asia? Well, he leaves with about $250 billion from China. That's the promise of deals, but we're not sure it all adds up. Though, by the way, he's not leaving today. He's headed to Vietnam, but he will end the trip this week. So that's what we've got lined up for you on First Word. Let's get straight to the GST story. Perhaps one of the most important GST Council meetings we've seen since the implementation of this tax. And I think for the last several weeks, we have now been speculating on what could come through. So I just wanted to pull up, that one
plate that talks about what the key expectations are from the council at this point in time. And on top of that list is reviewing the number of goods or items, let me put it this way, in the 28% slab. So the last time we were talking about this, I told you everything from chocolate to coffee, to cement, to certain furniture items, to certain consumer goods are in the 28% slab. So washing machines, etc., are all in that 28% slab. I think there are about 200 items in that slab, and several of them, now some estimates put it at as much as to 80% of them may come off the slab. I don't think it's going to be that much because let's not forget, they were put in that slab, I would imagine, on the basis of some math. Because all this government wanted to achieve and all this GST Council wanted to achieve right from day one was revenue neutrality, right? So when they distributed all the various goods and services into different tax brackets, they did that keeping an eye on what the ultimate tax collection figure will be, and they wanted that figure to be the same as we've been collecting through indirect taxes all these years. I'm not sure that they will have too much leeway. It could be that they got some of their math wrong, which is what some officials of the Finance Ministry have also been saying in the past, that some of the products that used to enjoy an excise duty exemption, etc., we weren't able to calculate the incidence of tax very clearly on that, and so they may have gone into the 28% bracket. They probably deserve a lower bracket. Many of the product categories in that bracket have also been complaining about very, very high taxes. So that slab and the number of items in that slab definitely going to get revised, and a large number possibly will come off that slab. The second thing we're expecting is harmonizing rates. Many products, many items that are in the same chapter have different HSN codes. These are tax codes. This is a procedural difficulty. It's leading to difficulty for especially the small taxpayers in being able to fill in the right kind of data in GST. And GST, all of it is online, right? And so the filling in of data has to be accurate the first time round, because you've got to match all your forms 1, 2, and then 3. So that's critical. They might take some decisions on that, is what was indicated by Finance Ministry officials earlier as well. There is the demand that we should have fewer slabs, but I'll go back to the rate, the revenue neutrality argument. I think Finance Minister Arun Jaitley had said that maybe it's too early to consider fewer slabs. We'd like to move towards that, but let's get a fix on how much money we're earning through this tax before we do that. And let's not forget, we don't have that fix as yet, right? So far we've been earning on an average about 92,000 crores every month for the months that we've seen collections come in. But because of the confusion around refunds, etc., we're not sure what the net tax collection is. So he said, look, wait till we have a handle on all of this, whether we're meeting our revenue neutrality targets or not, and then we'll decide on slabs. So slabs is not going to happen today. Reduce the number of forms or raise the quarterly filing threshold.
I was going to ask you that.
Yeah, so that's going to definitely happen. I don't think about reducing the number of forms may not happen as early as now. I expect there would be a lot of procedural and back-end changes that are required for that, based on my conversations with all the tax experts. But there is consideration that they might raise the quarterly filing threshold. Now, this is a tightrope walk, because the more people you put under the quarterly filing threshold, the more difficult you make for the input tax credit mechanism, because your matching is then happening only over a period of 3 months, not on a monthly basis. So if your supplier is filing monthly, you're producing your filings on a quarterly basis, how does the matching happen? I'm trying to put it as simplistically as I can.
Yes.
And so it's very easy to say, let's put more in the quarterly filing mechanism. I think the last time they raised that threshold to about 1.5 crore rupees, saying businesses who do a revenue below that can file quarterly. The demand is that that threshold should be raised again to a higher number. But like I said, this matching problem is going to prove to be a hurdle for that one change. So let's see how the GST Council circumvents that or overcomes that. And then finally, the last two big demands, which I don't expect will happen today, but I'm just putting it out there, include real estate in GST, and we've talked about that in great detail, include petroleum products in GST. We had the Minister for Oil and Gas also make a case for that. I don't think petroleum products is going to happen anytime soon. Real estate, I don't know. The chances are a little higher for that. Will it happen in this meeting? Maybe not. I don't think so. I think the Kerala finance minister was talking to Nikunj yesterday, and he said, no, we are very opposed to real estate coming in. So I'm not sure which way this is going to go. But 28% slab, the number of items being reduced there, and all the procedural help they can give small businesses, those will be the two things to watch out for in this GST meeting.
Well, so that's the broad brush agenda of the meet. And now, having put that into perspective, let's also get in Darshan, who's put together a detailed list of which companies stand to benefit from the possible, I repeat, possible changes that people expect would be made in today evening's meeting. Darshan, I'm guessing consumer companies is a must, and those would be the ones that will be very anxious to find out what comes out of the meet today.
Yeah, so basically consumer companies, your FMCG companies, your paint companies, your lighting companies, your home furnishing companies, some of these AC restaurants, all of them will be in focus. So there are two brokerage notes that have come out. There are almost 200 items with it, and there will be a lot of cross reference because Havells will be selling, your lights, it will be selling your fans also. So it will depend on what it is. Now this is the Motilal Oswal view. All these brands or all these things like paint or detergent have 28% rate. So there is a chance to if it comes down to 18%, these are the companies that benefit. So from the paints, obviously Asian Paints, Berger Paints, Kansai. Detergents, there's hair color, so there's Godrej there. Instant coffee, among the listed companies there is Nestle and HUL. Among the shampoo and deodorants, basically it's HUL. Titan is something that you have to watch out for, only listed watch company. Luggages, there is VIP Industries and Safari, and in footwear there will be Bata and Relaxo. So these are the companies that will actually benefit significantly because of in the consumer segment. Now if you're looking at the segment of electricals, fans, you have Crompton Consumer, you have Havells, you have Orient Electrics and Bajaj Electrical. Switches, Havells, and even cable and wire, there is Havells. So Havells actually benefits across if there is something that's done on the electrical front. And finally, on the home building front, on the tiles and ceramics, lots of listed players that are there: Kajaria, Somani, Asian Granito. In the furniture, these are these ply companies: Century Ply, Green Ply. And mattresses and furnishing, there is Bombay Dyeing. So this is the Motilal Oswal view. In case anything comes down, you'll have to selectively choose from these companies which will benefit or no. Now, Edelweiss has also come out with a note in terms of AC restaurants. If the GST rate comes from 18% to 12%, AC restaurant benefit. But remember, this benefits only if the input tax credit is maintained. If that goes, then they don't benefit. Then it becomes bad for them. Apart from it, again, ceramic, plywood, sanitary ware, handmade furniture, luggages, all of them will move from 28% to 18%. So it's a huge list. There are 200 items, and there are even more companies here. So it's a pick and choose what you need to do, and these are the companies that pretty much will benefit.
When you say benefit, and I think we should draw the distinction for our viewers who may not understand the nuances here, they will, if they're in a lower tax bracket, possibly pass on the entire benefit of that lower, not possibly, they will definitely pass on the entire benefit of that lower tax to the consumer, because otherwise they're going to have, the GST Council authorities watching very, very closely on the whole profiteering aspect of it, right? The diktat is very clear from the government and the GST Council that you cannot benefit from the gains that you get in this tax. You've got to pass the benefits on. Otherwise, the anti-profiteering guys will come after you. So what you might only achieve in all of this is that if you had seen a volume drop because the tax rate had made the price of that unit higher, then that volume drop or that loss in volumes might be recouped because of a lower tax rate, because more consumers might come and buy. And then there's some, slight. So I think it's that kind of gain that you have to watch for, and not any other kind of gain. It's not a direct bottom line gain, right? Not a substantial direct bottom line.
It can be if they don't pass on. So
well, I think
it all depends on the company. So
but companies will find it very difficult not to pass it on, because having lobbied so hard, having been lobbied so hard to move to a lower category, I think the government will watch very closely. They're doing this because they want to take away the difficulty levels. People are complaining that items have become more expensive. If companies don't pass this on, they are going to face the wrath of the GST Council and the government. They haven't used the anti-profiteering mechanism as yet, Darshan, but nothing stops them from using it.
I think a lot of them are household items, so probably they will. I'm not sure if, a restaurant might do it. I'm not sure if, the home building companies
They will have to.
Or the electricals will do it.
I would think the home building companies will do it. Two reasons, frankly, if you go to, just personal observations. One, if you look at the numbers that have come on QOQYY for a ceramic company or a plywood company, etc., they were very, very meager this quarter that came around. So the volumes haven't been that great. And a personal experience, you go out and buy, because of the large incidence of tax, the vendor himself encourages you to do a cash transaction. So it's actually not turned out to be higher tax collecting move, the higher GST. And therefore, if indeed there is enough watch being kept, and if the tax rates are reduced, then the government might achieve its objective as well of making sure that whatever tax incentive is levied does come about. Because right now, plywood, sanitary ware, tiles, etc., a large sector of dealings is still happening non-bill. And that's something that should correct itself.
Two reasons why they will pass it on. One is, of course, the fact that if your volumes have dropped because your prices went up, only because the tax rate went up, why would you work against your own business and not reduce the price so that your volumes pick up, right? Because at a higher volume, you do earn a higher margin. I mean, it's a matter of scale. And the second thing is that right off the bat of the implementation of GST, you saw consumer companies all drop. For instance, in the soaps category, you saw all of them drop prices like this because the government has gone on and on about how we expect you to pass on even the efficiency you get from an input tax credit to the consumer at the end of the day. They're very clear they don't want this tax to be inflationary. And so far, we haven't seen an inflationary impact as yet, right? We've seen a lot of difficulties.
I hope they do. It benefits all of us.
So I have no doubt that they will pass on the benefit. And it's just that when you gauge the gain on any of these companies, you've got to keep in mind that the benefit will be fully passed on. So what you see is a volume recovery, if anything, for some of these companies.
Yeah, which did get missed out in quarter 2. Sure. Let's see if that improves quarter 3 or maybe quarter 4, really. But moving on, that's a complete lowdown on GST if you ever wanted one. But there is more that is happening today. The country's largest public sector lender, State Bank of India, will report earnings. If we keep the exceptional gain from SBI life insurance listing aside, the state-owned bank is expected to report a muted quarter. Shraddha is standing by with all that the street is pricing in the SBI quarter gone by. Shraddha?
Well, before we get to the numbers, really just want to highlight the fact that, of course, June quarter was the first when the bank reported numbers as a merged entity. But in the March quarter, they did share the gross NPA and the consolidated bottom line number. Now, on a merged entity basis, in the March quarter, they posted a net loss of 3,300 crores and NPAs had risen to 9.11%. So everybody started believing that the balance sheet cleanup for the associate banks has now been done. But then came the asset quality shock again in June quarter when the consolidated NPAs jumped from 9.11% to 9.97%. And it was not only the corporate but also the retail and agri portfolios which saw slippages. So all of those factors are expected to continue into this quarter as well. Year on year, of course, the numbers are not comparable, but on a sequential basis, analysts expect the net interest income to grow by 6% and net profit to grow by as much as 37%. Now, that's a huge jump, and that is broadly only because of the capital gains that are expected to come in from the 8% stake sale in SBI Life Insurance. Otherwise, operating profit is expected to remain absolutely muted. Even if we look at some of the other factors, loan growth is expected to remain broadly muted at about 2 or 3% owing to the consolidation of the associate banks. Net interest margins are, of course, expected to improve slightly, and that's also what the management had guided for in the last quarter, partly because of the capital issuance. They raised QIP in the first quarter and also because of that savings rate cut that came in. That apart, overall, the stress additions are expected to remain high, but on a sequential basis, the fresh additions are expected to come in lower. That's broadly in line with the trend that we have seen for all PSU banks. And what will be important to watch is going to be the recoveries and upgrades as far as those retail and agri NPAs were concerned, which had shot up largely. Corporate slippages are expected to come mostly from within the watch list itself. So what are we watching out for? Of course, any comments from the management in terms of the integration of the associate banks, also the guidance and trends with respect to the asset quality, the movement in the watch list, and the trends going forward. Provisioning requirements for accounts, for which they have exposure to in terms of both the RBI's list, of course, will be another big factor. That apart, what the two key numbers that the street will be watching are going to be the corporate watch list number and also the slippages number. Right. Now, the slippages number in the June quarter was 26,000. This time, on an average, buy and sell side analysts have factored in about 18 to 20,000 sort of a number. So any number beyond that will definitely be taken as a negative for SBI Bank.
All right, Shraddha, how have other PSU banks done in the second quarter, the ones that have reported earnings so far, and what cues can we pick up from that?
I think the numbers say it all. So let's just look at the bottom line picture. You had a net profit of 560 crores from Punjab National Bank. That's flattish on a year-on-year basis. Canara Bank also reported a net profit of 260 crores. That's a 25 to 30% degrowth on a year-on-year basis. You had a huge loss of 1,500 crores from Union Bank. They said that was broadly on account of front loading of the provisions. People actually cheered the numbers and they said, oh, they're being conservative. But I think somewhere they're forgetting that this is only provision that they made for the first list. There's still the second list provisioning that needs to be done. IDBI Bank net loss of 198 crores. Central Bank's loss of 750 crores. Now that's the 8th consecutive quarter where this bank has posted a net loss. So there's not much to say. Let's look at the asset quality picture, just a comparison on a sequential basis. These are the September quarter numbers. So if you compare from the June to September basis, you will see that there hasn't been any major deterioration or further weakening as far as the asset quality numbers are concerned. Even on an absolute basis, if you look at the gross NPA numbers, sequentially they are more or less contained. So broadly that gives you a little more confidence that yes, the asset quality has peaked out, because this is something that the street has been talking about for multiple quarters now, but at least there is some stability as far as the numbers are concerned. IDBI Bank, of course, is an exception. Gross NPAs of 25%. There was a very interesting tweet where somebody actually said that why doesn't the IDBI Bank really call itself a charitable institution now? But that's what it is as far as the gross NPA picture is concerned. In terms of the outlook or how we can sum it up, what we can really say is one, that you need to keep in mind that the RBI audit is not yet complete for all of the banks, so that could be yet another factor to watch out for. Secondly, like I said, the second list provisioning still needs to be made. So while asset quality pressures have peaked out, yes, there's a little more confidence on that, but does that mean it will translate into earnings growth? No, because in all likelihood for the next 1 or 2 quarters, some of these banks will continue to report losses because they need to provide. And lastly, of course, it's the bank recapitalization which will really have a big role to play, and especially helping with to be able to make provisions. Of course, we have to see which bank is going to get how much, so that's another thing that is going to play out. But broadly, PSU banks, I don't think there's anything much to say. Private banks continue to be better.
I think 2 things, like you pointed out. We saw divergence issues for private banks. We've not yet seen that happen this quarter for public sector banks so far. But it's probably because the audit is yet to be completed, as you pointed out. And second thing, the second list is much longer than the first list, which was only 12 companies. Yeah. And the second list has some 30 companies or 60 companies, if I last remember. Yeah, about 30. So depending on which ones of those finally proceed towards insolvency and what kind of provisioning these banks will have to take. And SBI, I'm sure, will have a role to play in many of those accounts. So that is always going to be the overhang for these stocks. But thanks for the heads up, Shraddha. That's what we could expect from SBI today.
Yes, and speaking of banks, of course, watch out for Axis as well. That all-important board meet, and maybe some decision could come out during market hours. We'll keep you updated with all of that. But moving on, US President Donald Trump is on the last day of his China visit. The 2 countries are reported to have signed deals worth $250 billion, as we said in our headlines. But the claim may be based on some fuzzy mathematics. Bloomberg's Stephen Engel reports from Hong Kong on all that Trump has achieved in China and what that means for the US-China relationship going forward. Stephen?
Well, Donald Trump has left China with no major concessions from the Beijing leadership on North Korea or really trade. They did sign some $253 billion worth of various deals, many in the energy sector. But if you look at the details of those agreements that were signed, many of them are non-binding memorandum of understanding and could take years to come to fruition or even get signed commitments for payment. So it's very debatable right now on just how much of a victory this is for Donald Trump. However, the size of the deals could play very well back home in the United States. On North Korea, same thing here as well. With the Japanese in Tokyo, they were in 100% agreement on how to handle North Korea. And also in Seoul, he got the Seoul leadership on board, saying that we are standing, the United States standing side by side with the South Koreans, and even opened up the door for dialogue with the North Koreans. But in China, there was few public statements on the Chinese position on North Korea other than we are committed to the existing framework of the UN Security Council sanctions. Even the U.S. Secretary of State Rex Tillerson said or declined to comment on whether any specific new commitments were coming from the Chinese. So how you grade this trip so far from Donald Trump? Well, if you're Donald Trump grading it, it's win-win. But if you're looking at it critically, it's maybe a 3 or 4 at this point.
Yeah, well, I think a lot of commentary has come in around the fact that he wasn't able to get China to change its stance, even by half an inch on North Korea. So, speaking of politics, a quick look at local politics. The BJP will retain Gujarat, but its vote share will shrink in the state. That's the big takeaway from a second opinion poll that was done by an ABP CSDS survey. Now, the ruling party is expected to win anywhere between 113 to 121 seats in the 182-seat assembly. The Congress will continue to be the principal opposition party in the state, winning anywhere between 58 to 74 assembly constituencies. That's what the survey seems to have found. But what's most important in these findings, and the reason why we're talking about it this morning, is the potential narrowing of the gap in vote share, with a difference of just 6% between the two parties. So I think in the second round of the poll, Neeraj, which was conducted earlier on, this very same poll had said that the BJP would secure about 47% of the votes, down from 59% in August. So in August they said 59, now they've said 47. So that's the narrowing of the gap. The gap at one point was about, I think, 30 points, and it's now come down, or 30%, and it's now come down to 6%. Yeah. So that's something that people are sort of taking notice of, saying that narrowing of gap. And then we won't get into the details, the specific regions in which the Congress seems to be doing a little bit more of a standout job than the BJP is at this point in time. But there's a month to go, so who knows?
Who knows?
So much can change.
Yes, indeed.
All right,
but
that's all we have for you on First Word?
Yes, that's all that we have on First Word, but lots more coming up later on Indian Open, because we have some big market voices lined up on the show. We talk about the Indian equities and the macros and the political scenario with Madhav Dhar of GTI Capital, and about how global central bank action is changing fund flows and asset allocations with Krishna Mimani of Oppenheimer Funds. Okay, but for now, full tilt towards the day's trade. Navneet Saluja is waiting by with all the FNO action overnight. Navneet, good morning.
Good morning, Neeraj. Well, this week has been about profit booking because we've also seen the volatility inching higher. So if you go by the cues from yesterday's trade, no major addition was seen for both Nifty as well as Bank Nifty. As you can see, the open interest remained the same. But Mark, the premium, that's remained in that range of 45 to 55 points, telling you maybe the traders are waiting to take fresh long positions. That's what the premium is indicating. The Bank Nifty also did not add any sort of open interest addition once again, but the premium was really high of almost 128 points. We've been highlighting that the VIX has been inching higher. So yesterday, once again, it was it saw a bit of cool off, but it still closed above the mark of 13. In the last 3 to 4 trading session, India VIX has moved from that range of 11.5 to almost 13.5. Let's see then what happened on the option side. The Nifty PCR yesterday came down just marginally. Even the Bank Nifty, there was more of unwinding that one saw on the option side. If you could just pull up the active strikes, you'll see the 10,400 put, the 10,005 and the 600 call, all of them shed open interest addition. And the range for the market, which we were talking so far between 10,000 to 10,500, that range has actually a little bit narrowed to almost 10,200 on the downside to about 10,500 on the upside. I'll be watching out for the 20-day moving average, which is hovering around those levels of 10,280. Well, what are the FIs doing then? Clearly, they've been increasing their short positions on the index futures. Yesterday, once again, they added nearly 9,000 contracts, and they've been unwinding their long position. If you go by how they started the series, they were 70% net long. That figure has now come down to 56%. Clearly, they've been hedging themselves on the F&O side. Even if you go by in the option side, yesterday it was all about unwinding. They unwound their call puts on the long side, and even on the short side there was unwinding seen. But in terms of stock futures, it remains a stock-specific market, at least for the week. Gen Irrigation has entered into the F&O band. I'll be watching out for that counter. It was up 2.5% yesterday. Page Industries saw a lot of open interest addition. We do not see that kind of activity in this counter usually, but the futures have been trading with a discount of almost 300 points. Pidilite, which rose on back of good set of numbers yesterday, saw a bit of short covering.
Quite a bit of short covering for Pidilite, quite frankly, but the numbers probably deserve that kind of a reaction. Navneet, thanks a lot for joining us and giving us that perspective. Page, remember, a large portion of the activity happened in the second half of trade. I was looking at the delivery percentages on the cash side. But it's not a counter that is very thickly traded. So let's wait and watch what happens today. Small volumes can really spur this stock in a big way or bring it down as well. We'll wait and watch what happened. 8.5% in trade yesterday was pretty strong. However, it's almost that time of the show when we tell you what the commodity markets are doing. Pradeep Pandya Johnson to speak about that and to take the show forward. Pradeep, good morning, and a fairly muted reaction on crude.
Actually, if you look at it, although as of now crude is muted, but experts are kind of warning that there could be heightened volatility going forward. Like, for example, Goldman Sachs has mentioned in a report that there are two conflicting forces at work, really political uncertainty in Middle East that would probably prop up the prices. On the other hand, US crude production, which has been on an upswing, could cool off the prices a bit. So there could be more volatility and traders should brace for that. That is a warning coming from Goldman Sachs. NZ has also come out with the report and they have also talked about such factors. Gold, on the other hand, is holding on to near a 3 weeks high. Now, this is because dollar actually corrected a bit yesterday. Dollar index, for example, from 95 odd levels has come down to 94.5. This is because Senate Republicans came out with an alternative plan. Alternative in the sense that there are certain distinctions between the plan which is being discussed by Congress, and which means there could be a need to reconcile both of them if both houses pass different plans. So dollar immediately reacted and that propped up gold a bit. Gold is in fact up 1.2, 1.3% this week so far. To talk about other commodities, sugar has closed at a 7-week high, so that's positive. While in early Asian trade, rubber is trading lower. If you look at other commodities like metal, steel came off 2-month high, while aluminium trades lower for 7th consecutive day, copper trades lower for 3rd day, and zinc is trading a bit higher. So these are all the indications we have from commodities.
Let's wait and watch what happens to some of these. Bring up the Asian markets for the benefit of our viewers, and bring up the SGX Nifty as well, and it will show you. We'll start off with the tick of red. The Nikkei, which was up majorly in trade yesterday, is down about 1.5% or 1.33%, and the SGX Nifty is down about 0.5% as well. So we'll start off on a slightly weak note. Avinash Gorakhshekar, Head of Research at John Deere Capital, joins us right now on the show. Avinash, within all that's happening in the index, clearly a bunch of stocks in news. Let's start off, before we talk about earnings, let's start off with Axis Bank, the big board meet today.
Yeah.
Will that materially change the ticker on the stock, or a lot of those positives of a deal have already been priced in?
No, I think what kind of pricing, this offering, is made is very crucial. And most importantly, I think the market should obviously look at, the incremental kind of asset quality stress going forward. So I think fresh capital coming in is definitely a good sign. The stock has already seen a good amount of uptake, even before this meeting. So I would presume that, frankly, how the management actually outlines its strategy for the coming 2-3 quarters and how they manage asset stress quality is going to be key monitorables. And I would believe that, yes, the stock could see a short-term upside, but then thereafter it could consolidate.
Since we are discussing banking, before we go to Darshan for details on results, SBI is the all-important number. We have seen a correction in SBI, PNB, most of the PSU banks after that, initial surge. What is the strategy here? What is the expectation from the numbers, and what do you really plan to do with PSU banks?
I think within the frontline PSU banks, I think one could definitely expect that asset stress could be slightly lower as compared to the previous quarter. And I think the markets would obviously also look at the slippage number, the loan book growth number. So I think, what kind of growth commentary comes in from the, management post the results is very crucial. But yes, overall within the set of banks, I think SBI should report a decent number. I think markets are going with a number of roughly 2,800 crores. So I think anything, little more than that could possibly be a good pleasant surprise. But yes, the asset quality stress and the slippage number could be, very important to watch out.
Mm-hmm. So what is also happening, needed that at lower levels we have seen a decent put writing in stocks like SBI, even Yes Bank, the ones that corrected heavily. So there could be some support. Nearby, which means banking is the sector to watch out for.
Well, let's wait and watch. Yesterday, a bit of a bounce expected. Today, with the market coming off, you don't quite know. But irrespective of what the market does on open, the clutch of stocks that will react based on the kind of numbers that were posted yesterday. And let's get in Darshan to speak about what the earnings heat map is indicating today. Darshan, I'm getting tired of telling you or tossing to you saying that, hey, more green on the screen.
Yeah, it is because I and I've been saying the same thing. You know, the mid caps have been doing much better than the large caps. So it's been a decent quarter for most of the earnings, especially for the mid caps, not the Nifty. For the Nifty, it's been pretty much in line. So you can see that majority of them are green. Among the large caps, you have Aurobindo Pharma, you have CG Power, but on it was mixed set as far as SAIL and JSPL was concerned, and weak for SRF. SRF reacts very widely to weak numbers, so that is something I'll watch out for. Now let's take a few of them. First of all, DFM Foods, strong set of numbers, 20% revenue growth, a growth of 17% on the bottom line. Margin also came in much higher at 12.6% versus 10%, so strong set of numbers from DFM Food. You had Kaplan Point Labs, strong numbers, 36% revenue growth, profit jump of almost 60%, and margins coming in much higher, a 10 percentage point jumps as far as margin is concerned, so that was strong. CG Power, now this is the earlier Crompton Greaves, revenues were up 18%. Now the loss moved from an 11 crore to a 470 crore, but that was because of an exceptional that they had. They discontinued certain operations, that was there, but operationally it's been a strong number for Crompton Greaves Power this time around. You had V-Mart Retail, strong set of numbers, 23% top line growth, from a loss of 0.7 crores they moved to a profit of 2.7 crores. Margin improvement seen, EBITDA improvement seen, so strong set of numbers from V-Mart Retail. BLS International, the people who do the visa, it's been doing rather well for the past few quarters. A good 21% growth on the top line, profit increasing by almost 200% because of certain contracts that they have. Recently they got the Afghan contract. EBITDA increasing from 8% to almost 23%. So pretty much a stock to watch out for today. And on the weekend you had SRF. If you're looking at the revenues were up. Revenues were rather weak. Profit came down almost 16%, and there was a big drop as far as even the EBITDA and EBITDA margin is concerned. So SRF is rather weak. And finally, All Cargo Logistics, revenues were up 10%, but weak set of numbers, profits down almost 1%, and margins very, very weak. 17% drop on the EBITDA, absolute EBITDA, and margins coming in at 7% versus 9%.
Wow, thanks a lot for that, Darshan. You know, two stocks stand out for me, and I think Darshan kind of echoed what I wanted to say. But one, BLS, by virtue of the numbers that they've done. I remember the management speaking at the MK conference, which Bloomberg covered, of course, and the excitement in that stock was palpable. You could sense that fund managers loved the story, and the numbers are now doing justice to the kind of moves that the stock has had over the last 3 odd months. If you pull the 3-month chart of BLS, you will see what I'm talking about. It's had a fairly decent move. Yesterday, intraday is a separate thing, but 3 months, about a 50% uptick for this one. So that's done really, really well. And the weak one is SRF. Somehow, while the other, by the way, Vinati Organics didn't have a great quarter either, but somehow SRF is kind of disappointed more than surprised positively over the last many quarters now. The other companies are managing to do well. SRF, somehow one of the leaders of the pack, has stayed stagnant over the last 3, 6 or 9 odd months. Compare that to what a Deepak Nitrite or a Vinati Organics for that matter. If you look at the 3-month or the 6-month period, you'll see what I'm talking about. SRF has virtually gone nowhere, but the others have. Avinash, any of the numbers that Darshan spoke about, if you have a coverage there? And a thought.
No, I think Kaplan Point numbers have been very good. I think a 10% jump in EBITDA margin plus a very strong 60% growth in the profitability. I would believe that Kaplan Point definitely looks interesting. In fact, within the small mid-cap pharma basket, this is a very niche player, and I think in case the margins are maintained, I think you could see a strong re-rating. In fact, the stock should be in limelight because, you know, in these kind of mid-cap stocks, the re-rating probably is a trigger which is probably awaiting to be unfolded. So I would believe that Kaplan Point looks much better.
Mm-hmm. And one interesting development at Reliance Home Finance, considering a QIP, how do you really say it? After listing or demerger, it has been kind of muted for a while.
No, I think, Pradeep, I think clearly a QIP as soon as, getting listing is definitely something new to hear. But I would believe that, yes, the home finance market is growing admirably. And
but it's a demerger, it's a relisting.
Yeah, it's a relisted. Yeah. So obviously, the market should obviously look at a couple of quarters before they see. The Q2 numbers, Pradeep, in fact, have been quite strong. So I think hopefully they maintain the momentum. I think you could possibly see a good amount of appetite for this stock. And I would believe, yes, housing finance looks to be a nice secular growth story. Overall, I think, it definitely should be a kind of a good performer over the medium term.
Well, having said that, time to get in our research team members to speak about what else should one watch out for. There is, of course, Aurobindo Pharma, which reported numbers, but I think a clutch of other names which will come out with numbers. So 2 or 4 Nifty names. We'll talk about a couple of them at least, and then a set of stocks in news that Shraddha will bring about for us. But Darshan, Somit, as well as Shraddha joining to speak about all of those. Darshan, let's start off with the big result boy first. Aurobindo.
See, the headline numbers look good for Aurobindo Pharma, but if you go to the internals, it's not as good as it appears. So if you're looking at it, the headline numbers, the revenues were up almost 17%. So 4,400 crores is the top line that came in. Our estimate was 4,100 crores. Profit also 100 crore beat versus the estimates. Margins coming in line because there was this big other expenses which was up almost 160 crores. So that is something we need to ask the management. Formulations business did well. API on a year-on-year basis was rather muted. Now, US grew 21%, much ahead of what the others have done because of the Renvela launch that they had. It had the exclusivity there. Europe was up 37%, led by food quarter integration of the generis pharmaceuticals, and growth markets were up 38%. ARV was down 25%. Higher working capital was something that led to an increase in debt this time around, so that is something that's of a concern. Tax rate was much lower at 20% versus 27%, which is usually the case, and R&D expensing was surprisingly low at 3.6% of the sale compared to the street that estimated at almost 5%. So overall numbers are strong, but internally there are some questions that the management needs to answer. The conference call is going on, and we'll try to get in more what the management had to say on that.
Okay, thanks Darshan. We'll leave you with the call then. Thanks for putting that into perspective. That's been a busy morning for Darshan, all right, but a busy morning for Shraddha as well, because a bunch of stocks in news too.
Axis Bank, like you had been saying, the board meeting to raise funds is today. More importantly, of course, we know that the newspapers have been reporting that Bain Capital and 2 other investors are looking to buy anywhere between 5 to 10% in the company. Having said that, the stock has already run up about 11% in the last 10 odd days or so. But this investment news and today's board meeting will, of course, keep the stock active. Just Dial is yet another stock which could see some movement on the back of a Business Standard report which says that Google is interested in acquiring Just Dial's business. Having said that, the talks have been on for a while now, but according to the report, they've finally entered into exclusive talks. That's what the report says, so that could bring some interest in Just Dial. Yet another large company, Reliance Industries, is set to be interested in Alok Industries now. That's an ET report. Not the entire company, but certain divisions, specifically the polyester yarn division. And we're also tracking Indiabulls Housing Finance on the back of a bulk deal where PNB Paribas Arbitrage bought about 0.7% stake. So not too many stocks, Neeraj, today, but these are some which are likely to react.
Yeah, I mean, Alok Industries, Reliance, let's wait and watch if that happens, when that happens, and what does it do? I mean, Reliance is not known to be somebody who pays top dollar for assets, especially a bankruptcy-late company. But let's wait and watch. Thanks for putting that into perspective, Shraddha. Oil and gas.
Yes, BPCL on a standalone basis will be coming out with a strong set of numbers. Revenue would be marginally higher at 58,000 crore. Net profit would rise by around 225% to 2,400 crore. Now, EBITDA would also see a similar kind of jump to 3,400 crore, and margins would expand by around 400 basis points to 6%. A gross refining margin, that is a key number for an oil marketing company, is expected to come in at $9.3 per barrel versus $4.9 per barrel in the last quarter. Sequentially, this is a strong quarter on the back of strong refining margin, strong volume growth and inventory gains. Now, this quarter, the company is expected to come out with an inventory gain versus an inventory loss of more than 700 crore in the first quarter. Crude throughput is expected to remain in the range of 6.2 to 6.7 million metric tons in the second quarter. Now, refining business would do good, but on the marketing side, they could take a hit because of the digital discounts and because of GST. Now, the ramping of this Kochi plant would actually benefit the company in the second half of financial year 2018. So, stabilization of this Kochi plant and outlook on gross refining margin would be a key thing to watch out for in this result.
Okay, thanks a lot for that, Somit, as well. Avinash, Aurobindo Pharma, and the 3 or 4 pharma companies that have brought results recently, but Aurobindo amongst them, which has come out with numbers overnight.
No, I think Neeraj, numbers have been pretty much better than what the street expected. In fact, the street was expecting a profit of 680, 690 crores. So, bottom line wise, the numbers are very good. In fact, the key highlight was the 21% growth in revenue in the US markets, which is a pleasant surprise and actually it speaks a lot better for Aurobindo. And most importantly, Renewella has done extremely well. So, I believe that, they are in an exclusivity period as of now. Going forward, what is the kind of product pipeline, what kind of growth commentary the management puts out in the conference call? I think these would be key triggers to watch, but overall a very decent set of numbers, and I think within the pharma pack, I think definitely we could see a good amount of re-rating in this stock.
So that's the call on Aurobindo. Now Gaurav Bissa, derivatives analyst at LKP Securities, joins us on the show as well. Gaurav, good morning. First of all, looks like there will be a gap down possibly. What do you really do at lower levels? Is there a fresh breakdown and as an opportunity to sell, or we'll probably hold on to yesterday's level and recover like we did in second half yesterday?
Good morning. If you look at the kind of data we have seen, we're not seeing too much of buying happening in the put options. It was seen a couple of days back, but the intensity has reduced a bit. And I would not be too surprised if we see a bounce back coming in. There will be a gap down opening in both Nifty and the Bank Nifty, but they are trading at the crucial support level. So any bounce back, if we have a weekly close, say about 10,250 to 18 in the Nifty and about 25,100 on the Bank Nifty, I think that would be a good indicator that going ahead markets will see a good bounce back and we can see some more gains in coming days. There's a more clear trade in Bank Nifty because it broke out about 25,000 levels, which had a very high concentration or call option chain. Right now, if you look at it, 25,000 put option has the highest concentration among the weekly series. Yesterday, 25,000 put option had the highest concentration. The beginning of the weekly series today is also having the highest concentration. So, in all likelihood, it might hold, and if it holds 25,100, we can see a good sharp bounce back today itself.
Well, which is why you have this call on the Bank Nifty, right, Gaurav? Let's just get it done and over with. You are recommending buying the 25,500 call, if I'm not wrong.
Yeah, 16 November, 25,500 call option. Since we are opening with a gap down, the closing price was around 140, 145. I'm expecting it to fall towards 110. That can be a lucrative price point with a stop loss of 80. One can buy for targets of 160. If I'm not wrong, if I see a bounce back coming in, if I'm right, but today itself we can see it heading towards 150 odd levels, and if it sustains 25,250 levels on Monday, then this can double by the end of the weekly series. I think this is a very good proposition, a very good risk reward, and one should have this particular strike on the radar.
Kunal, on the other hand, you are looking at shorting some of these stocks. Which are these stock specific calls?
I think short PNB, which to my mind actually should go down. Given its structure, the stock I think trades below 200, which is a very major resistance. And even in yesterday's trade, we saw the stock going up, but then not holding on to those gains. So I expect for PNB to show some bit of decline today. Also, I think a couple of other stocks which can be sold short, where I think weakness is now creeping back into the system. PNB can be sold with a stop loss at around 196 and for a target of about 185.
Okay, so those are a couple of interesting calls. A short call on a PSU bank from Kunal Saragi on PNB, that is a target of 185, on a short on NMDC with a target of 122. Gaurav, your stock specific strategies, you kind of buying and selling both. So buy on a Sun Pharma and a sell on a Ashok Leyland.
Well, Sun Pharma for one has already seen a correction from 565 odd levels to around 530 yesterday, and we saw 10% O addition happening since October 30th or so. There was a day of short covering when we saw it bouncing towards 545 level yesterday. After the announcement of one of the fundamental factors, it again fell down towards 530 levels. Now 530 is also technically very strong. It's been trading in a beautiful channel, and the crucial supports are seen at 528, 530 zone. So I expect a bounce back from these levels. Target of 565 can be seen, stop loss of 528, decent risk reward. Second would be sell on Ashok Leyland. We have seen in last 7 to 8 trading sessions, 12% short positions have been seen getting built. And if you look at the option chain, there's more beauty if you look at around those levels. 120 call option has added almost 1 million positions yesterday, and there's a strong breakdown we have seen below 120 level. That was also the crucial support level. 120 put option has seen good amount of short covering. So this generally indicates that any bounce back in the name would be utilized to build fresh short positions. It can add back towards 108, 110 kind of levels. Use a bounce. It has already seen a correction. Use a bounce towards 118, 117 with a stop loss of 121. Play for targets of 110.
Okay, so that's a set of calls, of course, specific stocks which could react in the session. Just one more update really that I want on before we get into our special segment, that is Bloomberg Edge. Yesterday, after a really long time, you saw Coffee Day move up about 15% odd. Kunal Saravgi, any thoughts on this stock?
I think one should give it another couple of days. I think, Neeraj, so what we need to watch out for is whether or not the stock is able to take out this resistance at 265, 270. There has, of course, been a big move yesterday, but I think 265, 270 is going to be a major hurdle for this one. It's been an underperformer, mind you. So I would wait and watch and see whether we see follow-through buying coming in before I'd actually look to buy the stock.
There could be some stock-specific or company-specific reasons that we are not aware of. But Neeraj, you must remember that today the GST Council meeting concludes, and there is a possibility that GST on AC restaurants could be brought down to 12% from 18%.
Yeah.
And there are some other stories like plastic furnitures and several other segments which they are looking to kind of provide a relief.
200 items.
200 items actually, out of which 100 could be reviewed. That's what I heard.
And multiple companies in all of these 200 items. It's a wide list.
Definitely, but let's see what all can they really manage, because the council will be trying to kind of balance out the fiscal impact on the budgets also, both state and central government. So, but I'm sure there will be quite a lot of stocks that will get affected. But moving on to our special segment, Bloomberg Edge, where we throw up our analyst Jayesh Khilnani finds out an interesting pattern every day, and Bloomberg Terminal has thrown up a pattern on which stock? Well, that I can't really figure out, Jayesh. Which is the stock that you are looking at?
Morning, Pradeep. I'm looking at UPL, and in fact, today is going to be an interesting chart because there are few parameters which have turned, simultaneously, which is positive for UPL. The first one that we are referring to is the Bollinger Bands. It has given you a buy signal with yesterday's close as per the outside-inside pattern formation. First, let's have a look at how the Bollinger Band actually works. Well, it shows you, the expected range in which the stock is likely to trade, and you have to keep in mind a few lines which get plotted. So it's basically the moving average and an upper band and the lower band which get plotted, the three lines. And when the bands expand, it is said to be in a trending market, and when the bands contract, it is said to be in a sideways or a contraction market. Now, the outside-inside pattern formation that I was referring to. So what you have to do is look for two candles. The first candle has to close outside of the Bollinger Band, and the second candle has to close within the Bollinger Band range. Now, coming back to the chart of UPL, so that's how the Bollinger Band looks like on the UPL chart. You can see as of yesterday, the green candle that has actually bounced above the yellow line, and the previous one that has closed below the yellow line. So this is confirmation of a buy signal coming in for UPL. But there is one interesting other channel pattern formation that has been on the chart of UPL. That's the chart on your screen. Now you can see from July it has been on a declining trend. And if you connect the top of July and the top, which it made recently just before the earnings came out, that has been a declining channel trend. And we are at the bottom of this particular trend. And you've seen two instances. So once in August, early August, where the bottom of the channel was touched, and from there the prices bounced back. And once again in middle September, you saw the same thing plan out again. And currently we are at the bottom of the channel. So very strong cues coming in for UPL.
Okay, so that's the interesting pattern on UPL that we have spotted today. On Bollinger, is it possible to assess the efficacy of the indicator?
Yes, Pradeep. So overall, the efficacy is quite good. But on the buy indicator, it's even better. If you had traded all the buy signals generated by Bollinger, their net profit would be about 29 to 30%.
Well, UPL is definitely then the stock to watch out for. Thanks, Jayesh, for the update. Avinash, do you have a view on UPL? This stock has crashed quite a bit if you look at it over the last 2 weeks.
No, I think clearly in terms of the valuations, if you compare it across most of the agrochemical companies, Pradeep, the valuations definitely look pretty decent because Q2 was a slightly challenging quarter. But if one were to look at the kind of growth we expect in the second half, and most importantly in FY19, I would believe that this could be a good stock within the agrochemical space. It's a global and a domestic dominant player, and most importantly, I think margins could possibly be protected provided the currency factor does not go against them. But overall, I think the price definitely looks attractive from a long-term point of view.
Okay, that's interesting. So watch out for some of these names as well. I dare say watch out for SRF, that could have a negative reaction for sure in the session today, and a clutch of other names too. But before we move further, I think it's important to talk about autos. Yesterday at the Axis 2020 Stars conference, the whole talk was about whether auto companies could get in the valuations that staples get, and do they present better growth prospects. So in line of that, we decided to speak to the management of the biggest passenger car maker, Maruti. And it's really tough to match that kind of volume growth that Maruti Suzuki had in the first half of this year. And that's the word that is coming in from R.C. Bhargava, chairman of the company. Speaking to Jayesh, Bhargava also said that he believes that the new model of S-Cross will do much better than the earlier models. Let's listen in.
In terms of percentages, it cannot be higher because last year's second half was itself a high growth area. So because these percentages are related to what happened last year. So in the first half, we've grown by about 16%. We cannot get 16% in the second half.
Can you share some on-ground feedback that you have received for the newly launched S-Cross?
The response has been very good. And I think we built up a small waiting list for the S-Cross also, because this S-Cross now has improved many of the shortcomings which customers felt in the first version of the S-Cross. So it looks like to us that this S-Cross now is going to do far better than what has been happening so far.
There's just some snippets of that conversation that R.C. Bhargava had with us at Bloomberg Quint, but clearly sounding fairly confident, and why not? I mean, the numbers, the stock has been on a roll, and the sales numbers, the monthly dispatch numbers aren't looking too bad either. What a phenomenon this has been, Avinash. But what does one do here? Well, I mean, for somebody who's looking at the screen and thinking, oh, I missed the rally in Maruti, has he missed it for good?
I think, Neeraj, clearly, in these stocks, you got to just sit tight and wait for a couple of years, because these are not
what
stocks.
If somebody doesn't have it?
I think use any opportunity in the market. Whenever you see a correction, Neeraj, you should actually look at it as a buying opportunity, because these are not stocks which are tradable stocks. These are stocks which actually generate wealth over the next, say, 2-3 years. So even from these levels, looking at the kind of penetration in the Indian passenger car market, the kind of market share increase and the product range which Maruti has got, I would not be surprised that we could see a 10,000 rupee value for Maruti going forward. So it's not extremely unsurprising. So I think it's only a matter of time, and numbers do justify that FY19, FY20 could be a lot better than the current year.
Well, this news of Google being interested in Just Dial, I think we heard it for the nth time, and I remember having discussed this several years back with some analysts. Actually, there are, similar models, and there could really be an interest. But what do you do with Just Dial?
See, I think, Pradeep, recently, the company's CFO actually commented saying that they don't have any such proposal, and if any proposal does come in, they will obviously mention it. So it's purely speculative, and I would be surprised if Google actually pays a premium to acquire Just Dial, because clearly, I don't think Google would require Just Dial to actually penetrate the market. In fact, Google is a very large competitor, and there have been some concerns that if Google actually enters Just Dial's space, that would actually mean a little problematic for them. In fact, the last 2 quarters have been good largely because of some cost control measures. We are yet to see a double-digit growth from Just Dial. So I would be a little cautious here. Let things pan out, but this news clearly seems to be being floated in the market for a long time. So unless something really happens, we could possibly forget this in the next couple of days.
Yeah, the question is, what if it doesn't happen? Because the stock has had a bit of a rally already on that assumption. What if it doesn't happen? That's the key question. But anyways, we'll wait and watch for that. 2 or 3 stocks, I think a couple of these Pradeep was highlighting in trade yesterday in closing hours, was Tata Global, up another 7% in trade. Amara Raja had a fabulous move as well. And Rain Industries continues to rise and shine. Now, Gaurav, any thoughts here? Maybe a Tata Global, if not a Rain Industries. What does an average trader do here?
Well, any dip towards 232, 233, I can. That's a good level to buy with a stop loss of 228. Targets of 250 can be seen here. The risk reward is not that favorable. It's already moved up 4-5% yesterday. We were long in the name yesterday. We had recommended to our clients as well. So it's looking quite robust. And any dip should be utilized to build fresh long positions. I think we can expect good amount of momentum in the next 2 or 3 days.
Well, let's wait and watch. Tata Global Beverages, maybe some good momentum over the next 2 or 3 days. Rain Industries is the other one, up about 8 or 9 odd percent. And that's the beauty, Pradeep, isn't it, of what companies like Rain, I mean, HEG or Graphite may have had a bit of a correction in the recently, but otherwise, just the way the market is pricing in the earnings growth for these companies is quite substantial.
Definitely. And yesterday, this was interesting to see, over the last hour of trade, there were certain mid-cap and small-cap stocks where people were actually buying, and that there was up move or a recovery from lows with good volumes that we really saw. Kunal, any of these late movers, if you have picked up and you find an interesting trade there?
Rain Industries definitely, Pradeep. I think the stock has gone up almost 10 times in 2 years. So that, I think, speaks for itself. It's a tremendous outperformer. So is Bhansali Polymer and so many other stocks which have outperformed the market, especially in this chemical space. I expect for Rain Industries to continue to outperform. And the target on this one could well be 450, 500 rupees. But it's too late in the day to actually go out and buy these stocks, given the risk reward. So I think the people holding on to the stocks should very tightly, firmly hold on to them, is because there is more room on the upside. But for somebody who's a late entrant to the party, I think it's better to take a rain check on this and probably look for value elsewhere.
Mm-hmm. Well, let's wait and watch if that comes about or no. For now, though, the stocks are on a bit of a tear. Let's bring up what the markets could be doing this open, though. It's Friday, and let's hope it's not a tough Friday. Though we'll start off on a tepid note. The SGX Nifty is already indicated about 40-45 odd points of a downtick that we would see in the session today. The question mark is, will it worsen or will we arrest that fall? One eye will be out on crude oil as well, and if that is spiking in any way whatsoever or no. But here are the first rates on the pre-open session started already, and yeah, you could well have rates which are okay, not this green. Will probably start off slightly lower, but yeah, about 20-25 odd points, 30 odd points on the Nifty could well be the tick that we will see. Let's bring up individual names. I think Aurobindo Pharma and Tata Motors. Tata Motors has reacted yesterday, but post the con call, the big bull was bullish as well, seemingly bullish on the con call. And let's see if that one is reacting further. Aurobindo Pharma up about 2.5 odd percent. Tamo for now about 2.25 odd percent. We will watch out for Axis Bank. That will be that big banking name in the session today. Not because of the results, but because of the impending spoken about deal. And let's wait and watch what impact that has on the ticker today. Lastly, State Bank of India ahead of the numbers would be an interesting one. And a clutch of mid-cap numbers, yes, but SBI ahead of the numbers would be one stock that people will be keenly preempting. And let's wait and watch what happens to that one today.
We'll also look at Reliance Home, which is looking to come out with a QIP, and also RBL Bank that raised stake in the Swadhar Finserv, the company that they own. RBL Bank is here down a bit, 1 rupee and 50 paisa. Jain Irrigation is another one which we should be keeping an eye on, which enters the ban today, so there could be some bit of an impact. And also some of the interesting results that in fact came out yesterday, Aurobindo we have looked at. Other than that, let's look at what's happening to the stocks like Kaplan Point that Avinash just mentioned, and also Trent, Den Network and VMart were some of the good numbers in yesterday's trade. So Kaplan Point is up 3.5% so far. Trent is up just 1.5%. On the negative side, SRF that Neeraj has been pointing at. Let's see how that stock has reacted. It's down just by 1%.
Not much. Maybe BLS International could be interesting.
Yeah.
But splendid quarter, though the stock has had a bit of a rally. Again, this one is not reacting. Okay, no. It is reacting. Let's wait before we talk too much about it. And just a brief mention of the currency, if we can, before we go on to Nikki, who joins us with the brokerage call. But okay, look at that BLS International take. I know we're deviating too much. By the way, Pradeep, you want to comment on the currency?
Yeah, well, currency has weakened a bit, down 14 paise or so, 65.09. So struggling at around 65 levels and a bit volatile. I would say probably taking cues from what's happening in crude and also what FIIs are actually doing in Indian markets. If you look at dollar, it had kind of a weekend yesterday. So if we were actually looking at the dollar rupee pair, in fact, rupee should have strengthened and not weakened today.
Well, interesting moves there. But remember, interesting moves for companies like BLS. Before I go to Nifty, just want to bring that stock up. It's very, very volatile, yes. But just look at the movement in the stock and now affirming the kind of quarter that it came out with. Let's wait and watch if indeed this is the final trade. Are there reports? Not really on BLS, but a bunch of other calls. Yes, they always are. And Nikki Mirchandani joins us with the big brokerage calls for the morning. Nikki, good morning.
Hi. So the first one that we're picking up is FAML on Britannia. It says that it's initiated a report with a buy rating and a potential upside of nearly 18% for Britannia now. It says that expect healthy margin trends to continue for a period of time. Now remember, the margins have all doubled up in the span of 5 years, and it says that a large generation of cash raised the chances of higher dividend payouts. It also says that higher profitability combined with the gaining market shares is expected to sustain the valuation of the company. What's working well for the company? Well, strong positioning in your packaged foods, especially biscuits, cakes and breads, and also the untapped potential that the company has to grow its portfolio and consolidate its market through the rise in capacity is also working in its favor. Besides the in-house production, lower logistics cost and vendor consolidation due to GST, also better portfolio mix and high margins premium are expected to further drive the valuations of the company. The second one that we have on our list is Citi on SBI Life Insurance. Now it has initiated a report with a buy rating, and the potential upside for this counter is 22%. It says that franchisee segments are expected to drive the robust growth for this segment. It says that the company looks well positioned to tap upon the increasing financial savings of the country and also focus on increasing its share in the high margin segments. Besides that, bancassurance and agency drive distribution is also a positive for the company. It expects that improving persistency and the cost ratio are expected to drive the premium valuation of the company, while the higher return on embedded ratio value is expected to sustain these valuations.
Okay, thanks Nikki for all these details. SBI Life in fact had moved up in last hour of trade yesterday. It's cooling off a bit probably in early morning trade, but this just pre-open. We'll wait and watch. Avinash, you have a view on SBI Life?
Pradeep, I think clearly the numbers which came out after the listing, I think have been moderately good. But I think clearly even at these levels, if one were to look at the kind of risk reward in the next 12 months, I think the stock looks fairly valued, and over the next say 2 to 3 years, I think that is a time period where possibly one could get definitely significant value. So yes, it's a good long-term portfolio pick, but yes, in the near term, I don't see any major triggers which could actually re-rate the stock significantly.
Well, let's wait and watch. There's also a new kid on the block. Third-party logistics provider Mahindra's Logistics will list on the bourses today. Let's get in Sumit Sarkar, who's done a complete analysis of what should a retail investor who subscribed to the IPO expect from the listing today. Sumit, good morning yet again.
Good morning. Now, Mahindra Logistics had raised around 829 crore at an issue price of 429, and the issue was subscribed around 8 times, with most of the demand coming in from the QIB side. Now, QIB portion was subscribed around 15.6 times, HNI 2 times, retail 6.1 times. Now the street is expecting a premium of around 20 rupees per share, which is a listing gain of around 5%. So let's see how the valuations would stack up on listing. At a share price of 450, the market capitalization of the company would cross 3,200 crore. Price to earnings would be 70 times, while price to book will be 9.2, and market capitalization to sales would be 1.2 times. At a share price of 460, the market capitalization would be 3,270 crore rupees. Price to earnings 72 times. Price to book 9.4 and market capitalization to sales 1.2 times. Now, Mahindra Logistics is one of the largest third-party logistic company which works on an asset-light business model. Now, asset-light business model means that the assets that the company uses for operations are not owned but are taken on lease, and that's the reason the company also has a subdued EBIT margin. Now, if you see the revenue of the company, it can be divided into 3 different ways. Firstly, the segment-wise, second is client-wise, and third is source-wise. Now, segment-wise, supply chain management contributes 90% of the revenue, and it grew at a CAGR of 19% over FY15 to FY17. Auto components, auto clients contribute around 63% of the revenue, and it grew at a CAGR of 7%, while Mahindra Group contributes around 55%, but it was the other revenues from other companies that grew at a CAGR of 46% for the company. Now, if you compare Mahindra Logistics with its peers, the revenue and net profit grew at a compounded annual growth rate of 15% and 17% over FY13 to FY17, which is at a higher rate when compared to its peers, but its EBIT margin for financial year 2017 remains subdued at 2.3% because of its asset-led business model. Now, if you see the return ratios of the company, it also remains subdued compared to Blue Dart and TCI, but it was at a higher rate when compared to Gati. Now, return on equity was 13, return on capital on 16, and return on asset at 5.6. Now, if you see the balance sheet ratios, the book value per share was around 49 rupees, total debt was as low as 53 crore rupees, and debt to equity was also low at 0.2 times. Now, on debt and debt to equity wise, it was better than Blue Dart and Gati, but at par with TCI Express.
Okay. Thanks a lot for that. One eye out on Just Dial. By the way, it's up 10%. But just before that, since we are on the topic of Mahindra Logistics, Avinash, Sumit, thanks a lot for that. Avinash, have you looked at this IPO? What should somebody do today?
No, I think Neeraj, looking at the kind of valuations and the kind of return on equity and ROC numbers, I would believe that if investors get a 30-40 kind of pop-up on listing, I think some profit booking is advisable. I think this is definitely a good company over the longer term. They have a well-established business model, but at these valuations, I think the risk reward ratio is not very lucrative for investors. So I would believe that in case the stock opens say 40-50 rupees on the upside, I think once at least the investor should book out, and then probably at lower levels one could re-enter.
Okay. By the way, Pradeep, well, if wishes were horses, Just Dial is up 10% in the pre-open session. It seems to have settled at 10%. And remember, this is after the stock having seen a bit of a rally. So this is not a pop that has happened today. If you look at the last 1 month, Just Dial has had a bit of a move from those 400, 404 odd levels, 22% over the last. So that's about 100 points that the stock has gained in the last 1 odd month, in the last 15 days. Sorry?
So market believes the deal is happening probably.
The market is reacting to news. Hopefully the deal happens for people who are buying in right now, because if it doesn't, then the stock may well revert to mean. But yeah, for now, certainly seems to be a deal in the offing. Or at the market believing that, about 10 odd percent. That aside, really, I was looking at the Nifty 500, no great reactions except Divi's, which is up about 4.5%. And Avinash was speaking about Kaplan Point, that one is up about 2.5% in trade today. Avinash, before we thank you, to your mind, this is the big result to watch out for today, Kaplan Point.
Yeah, I think very strong numbers. A 10% EBITDA margin expansion, Neeraj, is extremely good. And this has been a very niche player, so they don't operate in the mass space. So I would believe that yes, even at these levels, you could see a little bit of re-rating and some follow-up buying.
Great. Okay, Avinash, leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Always good having you. Avinash Gorakshekar, with almost all the numbers on his fingertips, talking about what you should watch out for and watch not. But we tell you what you should watch out for, all that you need to know to stay ahead in trade today. The top 6 things. So BPCL, M&M, State Bank of India, Bosch, and Motherson Sumi are amongst the large caps that will announce the numbers today.
DFM Foods, Simco, Kaplan Point, CG Power, Trent, Den Networks, VMart, Aurobindo Pharma, Dishman and BLS International. These are some of the companies that reported strong numbers post-market hours yesterday.
On the other hand, weak hand for SRF, Igarshi Motors and All Cargo Logistics were amongst the other ones that didn't turn out a pretty good quarter this time around.
And also 2 big initiations were announced. Citi initiated coverage on SBI Life Insurance with price target of 800 rupees, and Bank of America Merrill Lynch initiated coverage on Britannia with a price target of 5,500 rupees.
Okay, Axis Bank board to meet to consider fundraising plans. Media reports had indicated earlier that Bain Capital could be a likely investor.
And Mahindra Logistics is set to list on the bourses today. Issue price was set at 425 rupees per share.
Okay, before we get in some opening strategies from our experts, time to get in a very special guest on the show. He's been on Bloomberg Quint before, but first time in our studios in Mumbai. Madhav Dhar, Managing Partner at GTI Capital, joins us on the show. Madhav, so good having you. Thanks so much for joining in.
Welcome.
It's an opportune time to have you, considering all that's happening across the world and likely to happen in India over the course of the next 1.5 months as well, with Himachal, the 2-phase thing on, but Gujarat as well coming up.
Yes, it is. I mean, at the risk of sounding not necessarily cynical, but perhaps differential. I mean, the Indian market is up a lot this year because Trump got elected. And the Indian market is up a lot because a person got elected that nobody expected. So it surprised the market. And the surprise was that this man said, I'm going to deregulate everything, cut taxes, and reboot American infrastructure. That's why the Indian market is up 21%. So let's be very clear about that. It's an average performing market in a global market triggered by an election in November. So it is almost entirely 80%, let's say, a global phenomenon. Then let's see what the local factors have been. Local factors have been, I can think of 3 or 4 things. There's GST, there's demonetization, there's the bank recap, and the bankruptcy bill. One was very negative, demonetization. GST is a mixed bag. It's been a negative speed bump. Eventually will become a positive. So that's a neutral to a slightly negative, I think. I think the 2 underestimated things are the bank recap and the bankruptcy bill. I think they're fantastic. Very, very positive, especially the bankruptcy bill. So the way I look at India so far, it's a global trend, and the 4 or 5 local events that are taking place are neutral. So there's nothing Indian happening before we either congratulate ourselves or berate ourselves. So the tide has come in, our boat has gone up exactly the same as a global boat. So there's no motor running here at all. Having said that, the reason I feel very optimistic is because there are many motors that could be kick-started. So I think that we don't even have an investment cycle going yet, and it will start. And the precondition of that is to get a credit cycle going. The precondition to getting a credit cycle going is to clean up the banks.
True.
So on the right track.
On the right track.
Let's see what happens over the next year.
But let's talk about that just after market opens. Madhav, just request you to stay on. Final thoughts from our technical expert. Well, Gaurav, 15 seconds, your top call for this morning.
It would be on Ujjivan. 380 is a strong resistance, so buy about 381. Targets of 395, stop loss of 376. It can even move 10% if it sustains 380.
Okay, Ujjivan Financial is what Gaurav Bisa said. That's his top call. Kunal, same question. 15 seconds, your top call for the morning.
Well, I'd go with Pidilite, Neeraj. I think it's got a great breakout yesterday, and I expect for a strong opening today. If the stock manages to hold on to 810, then I see it going to 830, 835 level. So one can buy Pidilite at the current level.
Thanks, Gaurav, as well as Kunal, for joining us today and giving us your thoughts. But here's the market at open today. And we'll start off on a tepid note. There's SGX Nifty, it's shown in hand. Actually, it's not that bad, quite frankly. Just single-digit fall for the Nifty. The Sensex to about 0.1%, so hardly any movement there. Quite unlike what the SGX was indicating. And that's quite unlike what the SGX has done this week. It's been a near-perfect indicator. The Nifty Bank to not falling too much. So it's actually a very flat start that we have on the bourses today. Let's bring up the heat map and try and see what's happening within the individual components. I would guess even Stevens, no more red than green on the screen. Any big movers? No. So the first thing is there are no big gainers today. Are there losers? Yeah, BPCL corrects a bit ahead of the numbers today. I can see that. There's some weakness in auto names like Hero and Tata Motors, and the Bharti twins are correcting. But I repeat, there is no one big mover or a set of movers that are really correcting or gaining at start in the session today. It's a very, very flat start. Let's tell you some individual names, maybe from the broader end of the spectrum. Though I think the one stock that you need to watch out for from the large cap space is Axis Bank. So ahead of the deal day today, Axis Bank down about 1.5%. Let's wait and watch if indeed the deal is announced today on the board meet. It's happening simultaneously at the Axis Investor Conference, so keep an eye out for that. The very weak quarter for SRF on all parameters, and typically tends to react with a bit of flurry. In today's session, about 2.5%. So no, not too much, but still reacting down about a couple of percentage points. Strong quarter two, I thought, for Crompton Greaves. There were anomalies which led to the PAT number, but operationally it was a fairly decent quarter. But somehow the market not liking it, down about 2.5% in the session today. Let me bring some other numbers wherein the numbers were good. BLS, well, it flattered to deceive in the pre-open rate. Seemed like it will probably move to double-digit gains, and it was a very strong quarter. But maybe that 50% uptick in the last 1 month, baking in all the positives that could have come in. So BLS just about flat in the session today. And last but not the least, Q2 margins for both of these companies rose. Kaplan Point as well as DFM. Kaplan Point, interestingly, up about 4.5% in the session today. Seems the earnings reactions too are pretty muted. Pradeep, what else are you spotting?
Style is up 12% now, so that's the top stock to track really. DVs is up 5.5%. Trent has gone up 3.5 to 4%. Hathway Cable continues to move up 2% today, and Bombay Dyeing is building on to yesterday's gain up around 6% or so. But on the negative side, we've also seen some profit booking in names like Coffee Day Enterprises after yesterday's sudden move. It's cooling off a bit. Down 6% now. Okay, it's corrected quite a bit now. It was down just 2% when the opening quote had seen. India Cement is down by around 2%. TV today, after yesterday's number, is down 2.5%. SRF, that you mentioned earlier, is also down 2.5%. So that was a disappointing number, which is really pulling this one down. There is profit booking in MMTC also, the stock that has moved up quite a bit, and Tata Global Beverages, some profit booking in this counter as well. So these are some of the stocks that we have tracked this morning. Well, let's move back to our special guest, Madhav Dhar. Madhav, what you argued, I would have agreed to that we are just a part of global up move. But look at it. What is the link between us and global markets? As FII is buying. FIIs were not really bullish over the last 12 months. They haven't bought as much as, they have done last year or last year.
No, the links are broader than that. I mean, I think we will get into what the differential trends are. The link is that there is a mass of global liquidity. That's a global link. Energy prices, oil going from 100 to 30 to 60 is not only a global phenomenon. In fact, you could argue it has a bigger impact on India. So that's a global factor, whether you like it or not. FIIs are the season of the month or the next 2 months. So it may not have been the case in the last 2 months, but it was. So I think it all sort of washes out. So if you just look at historical correlations, I'm not talking about this cycle, there's a massive, massive correlation. And most markets, especially Indians, like to think something very unique is happening because it's such a unique country, it's such a big country, and it really heaves and troughs. Every now and then you will have a breakout situation where something truly different happens. And you could argue 91 reforms were truly different. The 2000 boom was completely global. And I think there are a lot of opportunities for India to differentiate itself. In fact, my bet is when the next correction comes, and post that correction, India will be a much better performing market in average because a lot of local factors will kick in because we have reforms and opportunities that other countries don't. I mean, I'd argue that profit margins are unusually low. Capacity utilization is unusually low. So we don't need much top line growth to get a profit cycle going, which is an Indian concept. It's an Indian situation. Inflation still has been sticky, whereas the rest of the world is dealing with deflation. So there is opportunity for inflation actually to come down, which in India is almost entirely supply side driven. So you can visualize in your crystal ball what India looks like 2-3 years from now. And I think it looks fantastic. My concern is that just the starting point of valuations is very high and there's been some frothiness in the market. A very big asset for the financial sector is something I've argued for 2 or 3 years, which is hard assets are dead, not wounded, but dead. Real estate and gold as fundamental alternatives, not even alternatives, as the primary source of wealth creation for India for not only a decade, but generations, is dead. Not wounded. It's never coming back.
Never coming back. That's a tall statement, Mark.
As a primary source of wealth.
Got it.
Of course, there'll be cycles, gold will come back, real estate will come. But this thing that stocks are for some random punters in Bombay, but you really want to get rich, you must keep buying gold and buy homes. That trance is broken. And that trance, and you're seeing a flurry of that in the last 2-3 years, but that's not a cyclical trend. That's a structural secular trend, which means equilibrium PEs will actually rise. So you will never, people get worried about Indian valuations. I am short-term cyclically. Structurally, this will be the highest growth economy in the world for the next 15 years. It'll be the highest equilibrium PE market in the world for the next 15 years. So therefore, downside is limited.
Okay.
So despite my skepticism that we shoot ourselves in the foot in terms of reform, I remain very fundamentally structurally bullish.
Okay. So part 2 of my question, and one thing that we've kind of thought at Bloomberg Quint is not to try and talk about timing the market. So let's not get into that. But my question is, the correction that you spoke about, and again, difficult to predict how much would it be, but it would be a factor of what? A global market sell-off that comes in, or will we have some pressure points within, including valuations that you're talking about, which could lead to this correction?
No, valuations never lead to a major correction. They are a precondition to the amount of correction you're going to get. So it's like you don't how badly you get hurt. Something triggers a fall. How high you were sitting is how badly you get hurt. So you don't fall because you're sitting high. You fall because something happens. And I don't know whether it's tax reform in America goes completely to zero, which seems to be sort of literally 24-hour-old news, or all this monster we've been looking at, there's a nuclear missile going off from Korea. I have no idea. And the nature of corrections and big moves down, as you all know, is something that not anybody is really predicting. It could be there are 2 consecutive inflation numbers that are bad in the US and the Federal Reserve goes up 50 basis points. Right? That's game over as far as I'm concerned. I don't think that will happen. But again, as I said, it's very hard to predict what will happen. So valuations just tell you how far you're going to fall and how badly you're going to get hit. So no, I don't think it'll be some Indian people suddenly say, oh, valuations are too high and it triggers a big market correction. It'll be a global factor that filters onto India, that India can't protect itself because we don't have our own engines running.
But you seem to suggest that the engines are running in a way, in a manner of speaking. Yeah, sputtering, yes. No, not just the core economy, but even flows. Which, I mean, if you hear almost anybody on the street, including fund managers, they all seem to believe that this time around, and I know you will say the argument is that this time it's different every time.
You say it for me.
Yeah. No, but you don't think this time around it's...
No, I don't think it's different. And again,
flows.
No, please let me be very blunt. Flows are a coincident indicator.
Okay.
Flows are not a predictor of the future. Flows are up. FII is buying. Well, FII is buying from something. That means locals are selling. This is all zero-sum games, and I can't believe that we talk so much about flows. Flows happen because a good event has happened that's triggered the flow to happen.
Sure.
Flow will only continue to happen if the future event is... Markets are very smart, including the Indian market is extraordinarily sophisticated. I've followed this for 30 years, and the Indian markets almost never get it wrong over a 6-month trend. So I have tremendous respect for the market, so I have zero respect for flows. That is short-term indicator. And yes, it'll tell you what will happen next week. Some event will happen and the flows will dry. Then people say, wow, flows dried up. That's why the market is... No, it isn't. Something else happened. That's why the market... So I'm sorry, Zippo on that. So no, I don't care about flows. I do care about the fact that flows will continue because the trance of real estate and gold is broken. So that is not cyclical short-term flow. That's a structural change in a saving mindset. So a structural trend in a saving mindset is a fundamental factor. That's not a short-term flow. That's important. Okay. FIIs tomorrow, who gives a hoot about it? And just to be clear, FIIs is not a block.
Of course.
They don't all do a Twitter feed tomorrow and say, let's buy, Reliance or something. It's as big and as complex and as diverse a market. So this distinction between FIIs and AIIs is rubbish as far as I'm concerned.
Okay, I think one question or rather two that everybody watching this conversation would like to ask: A, how deep the correction could be, and B, then what does it mean? How much cash should one have in his portfolio so as to take advantage of a fall that...
I mean, again, that's a very good question and a very hard question. I mean, I'm worried that this is an aging bull. It's a raging bull, but it's an aging bull at the same time. I mean, typically this is when they die, that you're 7-8 years off the ashes of 2009. S&P bottomed at 666. It's whatever, 2,500 now. It's 4x off the low, which is a unbelievable market, both in terms of size and duration. So, and valuation. So the preconditions of a big top are emerging, which is age, size, liquidity ending, and extended valuation. So the preconditions are there. I don't know what will trigger it. The only offsetting factors, I would say, that 2009 March bottom at 666 on the S&P was an unusual low. I mean, the market, basically the world had unhinged and ended. So to say from there the market is so much, I think is overstating the bull market because it should never have gone down that low. So that is a mitigating factor. The other offsetting factor is liquidity may be, the change in liquidity may be receding, but it's still plentiful. So you have generally growth conditions positive around the world. You have liquidity conditions broadly positive around the world. And as I've said many times, valuations never trigger a big correction. But once a correction happens, so I think if something is triggered, the fall will be bigger than you think.
Okay. So with the fall coming the way it is, and because India is such a diverse basket of opportunities available, where I mean, I'm sure you've got your centers locked in as to when the fall comes in. These are the pockets that you believe will do really well over a 3-year period that you mentioned at the start of the interaction, or a 5-year period, or a 10-year period, as the case may be. What are those pockets? It's just talking about the themes, nothing else.
I think the broad theme, I mean, I'm still trying to figure out myself how to play it. I'm absolutely convinced that for political and economic reasons, both, you will have massive infrastructure spending in this country. Massive, especially as the banks get sorted out. Massive. So I know we're all skeptical. I mean, I've been roaming around Bombay and it's a disaster. Delhi is a disaster. So I think if somebody wants to get re-elected, you have to create massive jobs. Massive jobs are created through simply road building, construction, infrastructure, and low-cost housing. So I'm convinced that if there's a big trend, that's what's going to happen. It's going to absolutely boom. Literally starting now. I think roads has already started. So that's a big trend I'm looking at, and I'm going to look at stocks around that. So that's a little trickier, what to buy off that trend. So that's a trend. So I have a very boring trend. I mean, it's not fintech, it's not startups.
Whatever
I think
makes
that's
money.
Whatever makes money. So that's a big trend that I see, and I think eventually you will get a credit cycle going, and there'll be some beneficiaries there. So it's investment related and it's infrastructure related. It's not consumption, it's not tech, it's not the new thing. So I'm looking at very old-fashioned things. That where does new investment go, and what are the investment spillages in terms of ideas that are triggered off the fact that construction spending is going to be like this for 10 years.
So you are optimistic on banks' balance sheets getting sorted. Do you really see that now all the cases pending in NCLT will probably they'll be able to buy suitable buyers or investors?
Listen, as an equity investor, you have to be a natural optimist. Plus, I had a nice childhood. So I am fundamentally an optimistic person. So yes, I think it'll happen. Typically Indian style, 2 steps forward, 1 step back. I think this bankruptcy reform is huge. I've talked to a bunch of lawyers that they actually think it's actually getting implemented in a very deep, fundamental way. So it's not one of these Swachh Bharat and move on kind of things. It's actually filtering down. So yes, I'm very optimistic. And again, I'm one of those guys who believes in marginal change. I don't think anything is good or bad. I don't think India will be beautiful or ugly. I believe in marginal change. So marginal change of this disaster of 3-4 years in the bank balance sheet is improving. And so I own public sector banks for that reason. But for me, it's still a cyclical trade. By cyclical, I mean 2-3 years. I bought State Bank of India a year and a half ago. I'll probably own it. So I don't think this is a great bank. I think it's an improving bank. I don't think it's a great balance sheet. I think it's an improving balance sheet. I think buying it at below 1x book, you can't really go wrong. Would I hold it at 3x book? No, I'd sell it because I don't think it's worth. So it's a combination of entry price, marginal change, and the fact that most people don't anticipate the same marginal change you're anticipating. That's the way I approach everything. And this fits into that, the prism of how I see the world.
Wow. By the way, the markets have just come off a little bit, so just keep that at the back of your mind if you're indeed watching the day's trade. About 1/3% for the Nifty and the Sensex. The Nifty Bank holding out though. But Madhavdar, on that note, many thanks for joining us today in our studios.
Nice to be here.
And look forward to have you more often on this forum.
Thank you.
And by the way, another very special voice a bit later on after Madhavdar. We'll have Krishna Memani of Oppenheimer joining us a bit later on, so do stay tuned for that. And in our corporate conversation, Ashok Goel of SL Propack will be joining us to talk about the consumption space, the packaging space, and the results that they have just declared. Stay tuned.
Welcome back. You're watching Indian Open. Now, as we head towards the end of the year, you will see foreign portfolio investors wind down some of their India positions. To talk to them about what the year has been like and what the outlook continues to be on Indian equities, I have with me today Oppenheimer Funds. It's one of India's oldest and largest foreign portfolio investors. This morning with us, Krishna Memani. He serves as Chief Investment Officer at Oppenheimer Funds, and he oversees all of the investment teams at the firm. Though he personally manages more of the debt funds, he oversees all of them. Good morning to you, Mr. Memani. Let me start by asking you about the most important development we've seen regarding the global economy in the last few weeks, and that is the nomination of Jerome Powell as the next Fed chief. What do you make of that?
I think the nomination of Mr. Powell essentially tells us that the policies to be implemented by the Fed under his regime are pretty much going to be the same as Janet Yellen. I think that was one of the objectives of the Trump administration. Having somebody hawkish like John Taylor doesn't really help them from an economic or a political standpoint.
All right, that's a brief response. I have two further questions on global central banks, especially as you've called this in previous conversations, the century of central banks. Now, the Fed chief will change next year, as we know, as will the BOJ and the PBOC heads. That's one part. The other part, the great unwind has kicked off with the Fed. ECB starts to pull back next year, whereas the PBOC and the BOJ remain in unchanged positions. What does all of this add up to in terms of fund flows across the world in your assessment?
So I think if you look at the changes at the Fed chair may have changed, but the orientation of the Fed really has not changed and is unlikely to change in my view. So when I talk about the century of central banks, the point I'm trying to make is, given the demographics in the world, given all the other structural issues that we are dealing with on a global basis, monetary policy is going to be easy and supportive for a long period of time. Whether that ends up being 100 years or not, I don't know, and I wouldn't be around for you to throw stones at me. But I think it is quite likely, even with changes at the central banks in terms of personnel, the policies will continue the way they have been for the last 10 years.
And would you be just as sanguine about global economic growth and asset prices?
So global growth coming out of the 2015-2016 oil price commodity related collapse, the world is going through a synchronized global recovery, and therefore global growth is at its best level in a long time. I think expecting global growth to be at this level 2 years from today, maybe hoping for too much. So the growth outlook may get desynchronized. Having said that, I think the likelihood that we get into a recession anytime soon in the US, for example, or in developed markets, or in emerging markets for that matter, is pretty small in our judgment. And if that judgment is correct, then market prices can be supported, because overall, while growth may not be at the current level, growth will still be pretty good, policy will be easy, earnings continue to grow on a global basis. So we have fundamental and policy support for the markets at the moment.
Mr. Memani, you've gone on record in previous interactions to suggest that you don't think any of this will impact emerging market flows in any substantive fashion. Maybe I'm being a bit repetitive here, but I do want to put that question to you again. You don't think that emerging market equities will be impacted in any substantive way by this reversal in central bank policies?
I think the central banks would change their view on their domestic interest rate policy. And even if, for example, the Fed raises rates 3 times next year, I think it's unlikely, but even if that is the case, the net level of rates is still very supportive of overall growth trend. So as long as growth in emerging markets themselves is quite decent, which I think is going to be the case, and as long as growth in developed markets doesn't fall off a cliff, I think emerging market growth trends and markets should be supported in my view.
You know, apologies for arguing this too much, but at one time the mere mention of a taper spooked EMs. Yet you insist that the actual unwind, not just the mention of it, the actual unwind will not hurt EMs?
So I think there certainly is a scenario under which things go really bad. And that scenario would be rates were raised very, very quickly and in unanticipated ways, unanticipated by the market. And the Fed is acutely aware of it, and ECB for sure is acutely aware of what the impact of that would be on a global basis. And I think that is part of their motivation, and the fact that inflation is missing in action and has been missing in action for quite some time. That's why they are being very gradual and cautious. And as long as that is the case, I think the net impact on flows coming back to the U.S., for example, from emerging markets, which will kind of tank the emerging markets, I don't think that is likely to happen. If you wanted to watch one metric, one weather vane in the market to figure all of that out, I think dollar is the perfect tool. That's one metric you can look at, and as long as dollar remains at its current levels or tightened or goes up only modestly, as long as that is the case, I think we remain in good shape. If that changes and dollar appreciates 15-20% and gets back to the level of, let's say, 12 months ago, I think then we are going to have some problems.
All right, I've read your comments on our website, BloombergQuint.com as well, and I think you've stated that you expect the dollar to stay within the range of where it is right now. I will talk about the rupee as well in just a bit, but before that, let me move to talking about Indian equity markets. They've run up and run hard this year, up between 25 to 30% on key indices. There is some talk that maybe there is the case to be made for overvaluation. What's your assessment?
So I would say Indian equity markets are probably going to get supported at current levels, both from a domestic standpoint and from a international standpoint, because emerging markets are in vogue. So I don't think there's anything special about the Indian markets per se. You know, in India, growth is being challenged. I think the growth rate is not where people would like it to be, and it's softening at the margin, and that's not a good thing. And I think it'll have consequences for earnings as well. But as long as the dollar is soft and as long as the valuations in the US and other developed markets remain elevated, money is coming into emerging markets, and some of that money ends up being in India. And for Indian domestic investors, I think this is a multi-decade trend where we went through that in the US from 1970 to today, which is equitization of people's portfolios. And as long as that is the case, I think domestic flows into domestic equity markets will probably remain good, with some gyrations here and there. But from a long-term trend standpoint, that is going to be supportive of Indian markets. The challenge for India is to find ways of not inflicting pain on their own economy. And every so often we find ways of doing that, I suppose.
All right, I suspect you're referring to some key decisions made in India regarding demonetization and maybe even the implementation of GST. I won't get into that at this point in time, but what I do want to ask you right now, since you spoke of the dollar, the rupee is up some 5% this year. What's your view on where the currency is headed and how that will impact Oppenheimer's opportunities in debt and equity in India?
So I think, again, the rupee appreciated not because there was anything special about India per se. Indian economy was growing relatively well, and it was expected to grow relatively well. I think the rupee was appreciating because monies were coming into emerging markets, and India is a large destination for emerging markets. My view would be that if the Indian economy continues to slow, and I think there's a reasonable case to be made for that. If that's the case, while we may say that there's not a whole lot of room to cut rates, especially given the direction of fiscal policy, I think at some point we will have to reevaluate that unless the economy can come back from its current slump. The driver of rates and inflation and currency to some extent are going to be driven by what is happening in the economy, and I think we need to ask that hard question whether that assumption is correct or not at the moment.
Has your exposure to India changed in any big material way in these past few months?
So I think given Indian valuations and given the direction of the Indian economy, we clearly have not increased our exposure. If at some point valuations correct meaningfully or Indian rates become attractive all over again, we will take advantage of that opportunity as we have done in the past.
All right. I was looking through your list of top holdings. I know you don't like answering stock-specific questions, but I'm going to hazard putting one to you anyways. Your top India investments include stocks like HDFC, Z, Infosys, Kotak Mahindra Bank, Biocon. What is the approach here? What has it been in the recent past, and has it changed?
Our approach for investing in international equities and Indian equities just as much is to not focus on specific industries or specific sectors of the economy as much as it is focusing on specific companies and management teams, and where we think the opportunity to execute is extraordinarily good. And if you execute the management plan, valuations are attractive enough so that the upside is quite substantial. That's how we approach it. It's not because we like the entertainment sector or we like the banking sector. We may, but that's really not the primary driver. The primary driver is, take HDFC for example. The primary driver is a fantastic management team that has been executing consistently over a long period of time. That's what we are looking for in an investment.
But then, can I ask you about Infosys? Since you've mentioned HDFC, your fund manager wrote a letter to the Infi board in the last few months when the Vishal Sikka controversy was underway. The letter extended support to Sikka's leadership. It called for an end to the divisiveness. You continue to be confident on Infi and have a substantially large holding, at least within your portfolio, despite this leadership crisis. Since you are talking stock specific, why stay invested in Infi despite, the position that you held earlier?
So Infosys is a good example. I think without getting too deep into the specifics of things, we think it is still a very good company with Vishal or without Vishal. The footprint of the company, the capabilities of the company, the opportunity that the company has to execute its plan is fantastic. It's one of the best out there in the business, and valuations are very attractive. So it's a combination of factors, and we remain invested in the company because we think the future of the company is quite good, and whatever management changes take place, we evaluate it, and the conclusion that we have come to is it's something that will sort itself out in the long run. The company's capabilities and the company's footprint and customer base, all of those things are very, very attractive.
Curiously, you have just one NBFC in your top picks, that's Chola. Are you all not big fans of this sector as others have been?
So without getting into specific names and talking about them specifically, again, I would come back to my initial assertion. We evaluate a lot of companies in India, and where we think the opportunity is extraordinarily good from a management team standpoint and the strategy that the company is implementing. If those opportunities present themselves in any sector, we would be a participant in that investment. It's really very, very company specific rather than sector or anything like that for us.
All right, I get the message. One final question then. Given how hard we've run in India, do you expect to see a pullback anytime soon?
So I think for a significant pullback, the global trend into emerging markets has to reverse itself. As long as that is not the case, and that is not our base case, I think Indian markets remain supported, irrespective of kind of minor slowdown in the Indian economy. If the slowdown in the Indian economy is far more than what we are anticipating at the moment, then it's a different ball game altogether. Given our outlook on the Indian economy today, and given our outlook on emerging markets in general, I think if there is any pullback, it is going to be a modest pullback. And my hope and my expectation is that Indian growth stabilizes rather than keeps careening off the path that has been for a while.
All right, Krishna Memani, thank you so much for joining us this morning and for those insights into the Indian equity markets. That's the word then from one of India's oldest and largest foreign institutional investors.
Yeah, very interesting. Him saying that unless there is a global pullback, he doesn't expect too much of a pullback.
Well,
in India as well,
I mean,
which is natural for
you've got to
everybody to say,
contextualize the fact that foreign portfolio investors have not been big buyers in this market at this point in time.
The last couple of months for sure.
Yeah.
So the year as a whole, it's not been too bad. But the other interesting bit that he mentioned, that unless there is a flurry of rate hikes, you probably globally you wouldn't expect too much of a disruption. If it's a gradual hike in line with estimates, then the global markets may not take it too badly.
It's curious curious, and I'll end this because I know that we have a special guest in studio with us, but curious that when this big monetary easing program started almost a decade ago, everybody was really worried what it would do when the unwind started. And at this point in time, look at how sanguine we all are about the fact that the Fed started to pull back, the ECB will pull back next year. Don't know how the BOJ or PBOC will react, but everybody seems to be taking their stride. Yeah. Something to watch there.
Something to watch for sure. Let's see if indeed there is a reaction post the reaction happening. But for now, we'll shift focus, actually stay with the markets, but talk about a set of numbers that came out, and a pretty strong set of numbers from SL Propack. Good margin performance. I think the debt reduction plan is in place as well. To talk about all of this, Ashok Goel of the company joins us right now on the show. Good having you, Mr. Goel. Thanks so much for joining in. Now, it was supposed to be a quarter of transition for most companies in the consumer related pockets. You've done reasonably well. Margins have gone up despite crude prices inching up ever so slightly, more so in the month of October, but inching up. How has this come about?
Yeah, Neeraj, I think it is important for us to understand that SL Propack India revenues, because the focus seemed to be India because of the disruptions, is only 40%. So 60% of our revenues come from overseas, right? So India was soft because of GST, but the fact is that it grew about 4.3% in India. And in the same period last year, we were growing in India at 15.4%.
Wow, that's a big come down.
So there is still, therefore we are seeing that it has a potential to continue to grow. And rest of the world, China did very, very well. Americas, both US, Mexico, Colombia, all the markets did well. Egypt actually did well, more than 66% growth, but it doesn't actually reflect in rupee terms because their currency devalued at 90%. So these are few challenges, but for translation impact of various currencies, we have grown actually 14.6% on top line, and bottom line has grown on a global basis 17.6%. So and margin expansion. So margin expansion actually happened last year. We had a lot of consolidation happening, multiple plants being consolidated into one. New unit in Colombia was this thing. So one of cost, and then these units churning out the efficiency and the scale benefits. All that has helped.
Okay, so how would the next couple of quarters or the next 4 quarters look like? Because you are talking about multiple factors. One, India has the chance to grow back. Global is not looking too bad. In fact, if we heard Krishna Memani or any of the other people as well, everybody's talking about the global growth looking okay. So therefore, there is no reason for the global growth from the global markets for you to dip. And the fact that you've been talking about how non-oral care and the increasing share would only drive more revenue growth for you. So the building blocks are in place for the next 18 odd months. You don't foresee any kind of hiccups?
No, except Europe, where I think it's more internal. Our team has to get their act together. Except for Europe has been a disappointment for this quarter, for whole of this year practically. Even though Germany, we acquired 100%, we were only minority earlier. And that efficiency of that has gone up to the rest of the Europe level. Which means earlier it was 8% of EBITDA margin, now it is at 12% EBITDA margin, which is equal to rest of the Europe. And now we see the whole Europe to push up the things. There are some challenges, which is, I guess, more of the leadership challenges that we are pushing them and getting things up.
I was just curious, what 60% of your India business is oral care, right?
In India, it's the other way around. In India, our 48% of our revenue is oral care.
48%.
Yeah.
And do you see the proportion between oral care and non-oral care changing dramatically from here on?
Yeah. So India is 48% oral care.
So almost half is oral and half is not oral.
Yes. Whereas globally, 60% is oral care.
Correct.
Our objective is to take it to 50-50.
Wow. Okay, that's another 2%, right? 48% in India.
Global average 50.
Oh, global average. So you're going to reduce your oral care portfolio?
No, so we are not going to reduce. While we continue to grow in oral care, we will continue to push to grow in oral care. which means non-oral care target is a moving target.
Okay.
Yeah.
And in India?
In India, I think we are growing both in oral and non-oral as well. So non-oral push this year and next year will be even higher.
So the margins there are higher, right, in the non-oral category?
Margin as a percentage remains the same, but the sales price, the revenues are 2.5 times.
Realization is higher.
So therefore it reduces pressure on my capital investment because I get 2.5 times revenue from the same assets. And it helps improve my return on capital employed, return on equity, and everything else.
Okay, so am I safe, or are people safe when they assume? I'm looking at the clutch of reports that have come out post your numbers as well, and everybody believes that you will probably grow at about 15% for this year, and maybe 15% CAGR until FY20. Is that a safe estimate, or is that a conservative estimate? Because I think it's probably in line with what you've done for the past 3 or 4 years when you were undergoing these periods of consolidation, getting your act together within India and otherwise as well as the conversations that we've had in the past. If all of these are over and if Europe is the only moving piece, is 15% a conservative target?
I don't think so. Given the fact that we had demonetization and GST challenges on the 40% of the revenue, and rest of the world, different geographies have had their different challenges, and we are getting all that up together. So our stated objective is also to grow top line at 50%, bottom line at 20%. So there may be sometime small difference, but on CAGR basis, that's what our objective is also.
Okay.
So I won't say it is conservative or optimistic, but that's the realistic number.
Okay, I have one last question, frankly. Yeah. I also remember a conversation that we had maybe a year and a half ago, thereabouts, wherein you were talking about how within some of your large clients, you were trying to do client mining, wherein a large portion of your oral care clients will start accepting your non-oral care business as well. Now, how successful has this strategy been? Or in order to increase this non-oral care business, you will need to get in a completely different set of clients?
So it's a bit of both.
Of course it would, but what's the larger proportion?
So the existing clients who are oral care customers are on board as far as non-oral care is concerned.
In a big way?
Yes, the objective has been, but in non-oral care you need to understand there is a difference. The difference is the SKU itself of non-oral care, beauty and cosmetics, the shelf life of the product itself, not the is not more than 18 months. So every 12 months, 18 months, there is a churn in the portfolio in non-oral care. So while we got that business, if the product is now done exceedingly well, very good. If it is not doing well, then we are on to something else with the same customer. But the fact that oral care customers globally are concentrated, so there are plenty of non-oral care customers ecosystem across the world. And by virtue of that, we are actually diversified our whole customer base. And in India, for example, today we have about 300 active customers, which is a lot. When
Patanjali one of them?
Of course, Patanjali is one of them.
So how are they doing? They seem to be sort of posing some big competition to the incumbent players in the toothpaste market.
Well, I can't comment on the narratives that.
But you know the inside story of how well they are doing or not, right?
Of course we do, but they are doing well. They are growing. We are also growing with them, and we are catering their non-oral care portfolio. Almost 100% is done by us.
And still you won't tell us how well they're doing against the others.
Obviously.
What are you most enthusiastic or optimistic about in terms of growth in the next few quarters?
So in India, we are going to have a huge push on pharma.
Okay.
And pharma is showing a good promise. Oral care has bounced back as far as GST is concerned. So obviously the remainder are the non-oral care, which is beauty and cosmetics, which have inched up to a good extent. Pharma was the last one, which is now bouncing back. And in any case, in our growth plan in India, we will have non-oral care push harder than oral care.
So in non-oral care, pharma would be a big constituent?
Yes, it will be. Right now it is not, but it will be.
Anything stand out about pharma in terms of margin contribution or anything like that makes you look forward to being able to expand that portfolio substantially?
Yeah, so as a thumb rule, I say that oral care and non-oral care, the revenue is 2.5 times. Of course, the products are also different, but for the consumer, it doesn't make a difference. Because of the barrier properties that you require of the product, shelf life, and we keep pushing because it is still in aluminum tubes. And aluminium being a good barrier properties, but is a soft metal which tend to react with the product filled inside. And in order not to react, you have to do a industrial grade lacquering, which is being banned worldwide.
Okay.
And therefore it will be a challenge. Second, worldwide again there is hardly any capacity addition in aluminum tubes for last 10-15 years.
Okay.
So the business are concerned about their business continuity, and therefore they are looking for alternative, and what best than tubes, the laminated tubes, and that too from SL Propack, because we have huge R&D background base where we can customize the product based on the
So you see more and more business moving to
Exactly.
you from that.
Yeah.
Great. Mr. Goel, we'll leave it at that. Thanks so much for taking the time out and joining us and talking to us about your business and the quarter as well. Pleasure having you. Okay, in about 30 seconds, before we hand it over to the FNO show, in about 30 seconds, the Mahindra Logistics issue will list. So let's talk about that for a moment. Remember, the discovered price, not as, or probably in line with what people were anticipating. So about 2 or 3 odd rupees higher than the issue price. But if anybody or any of the bankers or the analysts are to be believed, it's probably an issue that will make money at some point.
Congratulations!
For now, 7.8 times, you really don't expect too much of a firework or too many fireworks really on the listing. And you're not seeing those either. So 428, maybe 2 or 3 rupees lower than the discovered price, a rupee lower than the issue price as well. So this will go down, at least the start will go down as a very tepid listing. Let's see if there is more in store during the course of the day or over the course of the next 1 month. But we call it a day on this leg of Indian Open. Hand it over to the FNO show. We'll take for the action on the other side. Thanks so much for watching.